Here are the crypto top headlines covered in this video. XRP price explosion to $40 is definitely a possibility for these reasons. Next, Sam Bankman-Fried files appeal for felony conviction. Also, SEC softens stance around SOB 121, says Galaxy Research. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, XRP price explosion to $40 is definitely a possibility for these reasons. According to popular crypto analyst Steph is Crypto, XRP could be on the verge of an extraordinary rally, potentially soaring over 7,400% from its current price. Speaking on Monday, Steph offered a detailed analysis suggesting that while this target may seem ambitious, a combination of technical indicators and fundamental factors makes it conceivable. Notably, the analyst highlighted the widely discussed 7-year symmetrical triangle pattern on the monthly chart. The price is currently still getting compressed in this huge symmetrical triangle pattern, he explained. He further pointed out that such patterns have historically led to substantial price surges, citing a 2017 instance when XRP experienced a dramatic rise following a similar breakout. According to him, this suggests that history might be poised to repeat itself. We are nearing the apex, and the technical target of this pattern in case of a breakout is located around $40, he added, emphasizing that the price tag for XRP is definitely a possibility and maybe even a lot higher. The pundit further fortified his argument on the market capitalization of XRP, despite skepticism from some quarters regarding a $40 price target due to XRP's current price cap of just below $30 billion. Steph argued that the market cap alone does not accurately reflect the cryptocurrency's potential. The market cap of a cryptocurrency doesn't reflect the actual value or money in the protocol, Steph stated. It's more a theoretical figure based on the assumption that all coins in circulation could be sold at the current price, which is unrealistic. Additionally, Steph emphasized that the total altcoin market cap, excluding Bitcoin and Ethereum, has not yet reached new all-time highs, suggesting significant potential for growth in the altcoin space, including XRP. He pointed to upcoming developments, such as the anticipated launch of Ripple's USD stablecoin, or RLUSD, which could further bolster XRP's ecosystem. That said, Steph's optimistic analysis comes even as XRP is experiencing a challenging period. However, according to Artur Kurjakulov, CEO of XP Market, who brought the issue to light, while this drop might seem alarming, it could signal a reallocation of capital toward newer, innovative projects within or beyond the XRP ecosystem, potentially leading to fresh development opportunities, especially with the upcoming launch of the stablecoin. At press time, XRP was trading at 57 cents, reflecting a 2.56% surge over the past 24 hours. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Sam Bankman-Fried files appeal for felony conviction. Following the collapse of crypto exchange FTX in 2022, the former CEO faced a jury trial and was convicted of 7 felony counts and sentenced to 25 years in prison. Lawyers representing former cryptocurrency exchange FTX CEO Sam SBF Bankman-Fried have filed a long-anticipated appeal for his conviction on 7 felony counts and his 25-year prison sentence. In a September 13th filing in the United States Court of Appeals for the Second Court, SBF's lawyers filed a 102-page brief claiming that the former FTX CEO was never presumed innocent, subject to scrutiny that allegedly affected prosecutors, the presiding judge, and treatment by the media. Bankman-Fried's legal team announced in April, a few weeks after a federal judge sentenced him to 25 years in prison, that they intended to appeal. According to the appeal, SBF's lawyers alleged the jury was only allowed to see half the picture with FTX funds, claiming prosecutors had presented a false narrative that the money was permanently lost and Bankman-Fried intentionally caused that loss. They also claimed that counsel for the FTX debtors worked with the U.S. government in a way that was above and beyond cooperation, providing information allegedly as an arm of the prosecution. From day one, the prevailing narrative, initially spun by the lawyers who took over FTX, quickly adopted by their contacts at the U.S. Attorney's Office, was that Bankman-Fried had stolen billions of dollars of customer funds, driven FTX to insolvency, and caused billions in losses, said the appeal. Now, nearly 2 years later, a very different picture is emerging, one confirming FTX was never insolvent and in fact had assets worth billions to repay its customers. But the jury at Bankman-Fried's trial never got to see that picture. The legal team requested the appellate court grant SBF a new trial with a different judge. It's unclear whether the Second Circuit could rule to affirm Bankman-Fried's conviction in the U.S. District Court for the Southern District of New York or reverse the decision and set the groundwork for a new trial. Background: before 2022, Bankman-Fried was one of the most prominent names in the crypto industry, along with then Binance CEO Changpeng Zhao and then Celsius CEO Alex Mashinsky, both of whom have gone on to face criminal indictments. In November, however, a liquidity crisis at FTX rapidly caused the exchange to collapse as it did not have the funds to back user withdrawals. Authorities later discovered that Bankman-Fried allegedly ordered FTX's sister firm, Alameda Research, to use funds from the exchange for investments, in violation of federal laws. Bankman-Fried was extradited from the Bahamas, FTX's headquarters, and SBF's home at the time, to the U.S., where he was indicted and released on bail. In the lead-up to Bankman-Fried's criminal trial, the former CEO shared personal information about former Alameda CEO Caroline Allison, also his ex-girlfriend, with New York Times reporters. The article and other bail violations contributed to Judge Lewis Kaplan ordering SBF remanded to jail, where he has been housed since August 2023. Following a 6-week trial, a jury convicted Bankman-Fried on 2 counts of wire fraud, 2 counts of wire fraud conspiracy, 1 count of securities fraud, 1 count of commodities fraud conspiracy, and 1 count of money laundering conspiracy. In March 2024, Judge Kaplan sentenced him to 25 years in prison. Others awaiting sentencing tied up in court. Bankman-Fried was one of the biggest names in the criminal indictment, but 4 others also potentially face prison. Former FTX Digital Markets co-CEO Ryan Salem, who reportedly tipped off Bahamian authorities about FTX's activities, pleaded guilty to criminal charges in 2023 and was later sentenced to 90 months in prison. However, Judge Kaplan is considering whether to allow him to petition to vacate his guilty plea, which could result in a new trial. Ellison, former FTX engineering director Nishad Singh, and FTX co-founder Gary Wang all pleaded guilty and testified at SBF's trial, largely cooperating with authorities. The former Alameda CEO is scheduled to be sentenced on September 24th, while Singh and Wang have hearings set for October and November respectively. Our next top headline: SEC's softened stance around SOB 121, says Galaxy Research. In May, United States congressional lawmakers voted to repeal Staff Accounting Bulletin 121 in a 228 to 182 bipartisan vote. During a speech on September 9th, Paul Munter, chief accountant for the United States Securities and Exchange Commission, appeared to backpedal on the SEC's Staff Accounting Bulletin 121, or SOB 121, measures limiting banks from providing digital asset custody services to clients. According to an analysis from Galaxy Head of Research, Alex Thorne, Munter provided exemption criteria that would allow bank holding companies and introducing brokers to circumvent the custody provisions laid out in SOB 121. Banks can avoid SOB 121 reporting requirements if they receive written permission from state regulators, custody client assets in a bankruptcy remote manner, outline clear standards in contracts, and conduct regular risk assessments. Introducing brokers can also exempt themselves from the SOB 121 requirements by meeting 3 criteria. The brokers cannot possess client private keys, cannot be third parties in the transaction, and cannot be agents of the introducing broker. Lastly, the introducing broker must obtain a legal opinion attesting to its status as an exempt introducing broker of digital assets. Thorne explained that these exemptions would carve out a giant portion of entities initially subject to the reporting requirements introduced by SOB 121. However, large national banks, which are under the control of the Office of the Controller of the Currency, or OCC, likely won't be able to qualify under the SOB 121 exemptions and likely still have to appeal directly to the SEC if they want relief. Despite these limitations for large, nationally chartered banks, the Galaxy Head of Research ultimately concluded that the easing of the SOB 121 provisions was a positive development for the crypto industry and the adoption of digital assets. In a statement to Cointelegraph, Thorne explained, "It's possible that the SEC never intended that SOB 121 would apply to banks." He further explained, "As banks became interested, the full scope of the accounting standard became obvious, leading to significant pushback on the SEC, but having dug in its heels over the years, it became politically difficult for the SEC to adjust its posture. These measures may also have been introduced punitively to target the cryptocurrency industry and digital asset markets," Thorne opined. Staff Accounting Bulletin 121. The SEC first introduced SOB 121 in 2022 and began to face mounting pressure from U.S. lawmakers to repeal the regulations by February 2024. In May, the United States House of Representatives elected to overturn the SEC's SOB 121 reporting rules by 46 votes. However, President Joe Biden vetoed the repeal. He claimed that repealing SOB 121 would have undermined the SEC's effectiveness as a financial regulator. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.